right, good afternoon, folks. This is your daily video from seasonalswingtrader.com. This afternoon, we are looking at March and June RBOB gasoline. That should be slash RB or RB on most platforms, depending on what you're trading on. RBH7 for the March contract, RBM7 for the June contract. Looking primarily to March. March is front month, considered the front month right now. June will be the next month. I'm going out a little bit further just to give us some time for a potential play in RBOB. Looking at the energy complexes in general, but today we really want to focus on RBOB. Today is Friday, January 27th. So we have some interesting things occurring in the energy markets. I think there are poised for a breakout one way or the other. One thing to note is that for all the seasonal energy markets, we are looking for a move right around early February and all the way up into June for a leg higher. But if you're looking at the daily charts, March and June contracts, we'll switch to the June here in a second, you can see that we look kind of sick. We started to roll over. We got the 9 and 15, 9 below the 15. Still above the major averages here, and on a price-related basis, from a 3 and a 5 year standpoint, we are right in between. So 5 year, we would be trading around the 142 mark, and on the 3 year mark, we're trading around the 180 mark. So we're really kind of at the midway point in between. But you can see here the 10 and 15 year averages. We are about a dead near bottom and looking to go higher. If we go over to the June contract, very similar price action. We'll probably switch over to the June here to start watching as we move into February. We'll just delete the March contract and focus on June exclusively. But same situation, we're just trading a little higher today. On the June contract, we're around 177.85, down about 1.5%, which puts us right about here on the chart. If you go back to the March contract, we've got these 1, 2, 3 patterns forming, and we've actually broke out to the downside already on the March contract. And there was a little tiny 1, 2, 3 here, which was this move right here, and that has already paid off at around $3,800 a contract. Now, doing outright futures, this contract is a little rich, as is most of the energies, nat gas, crude oil, heating oil. Probably look around $5,000 or so on initial margin, depending on who you're trading with. But each contract represents 42,000 gallons of gasoline, and each tick is $4.20. So would most likely be playing this with options. Let's look at the weekly chart first and the monthly. You can see on the weekly chart, on the daily, we're looking pretty toppy. I think we would all agree here. We're looking very toppy, almost kind of in line with the general market indices, looking to roll over here. But if we look at the weekly chart on a price relative basis, we are not that high. You can see we certainly have room to run. We're actually just coming off multi-year lows here, so it looks like we could be running up and set up for a leg higher here, and we're bouncing off the trend line on the weekly chart, so it looks like we could come back up to the 200 level. On the monthly chart, it's really, if you look at the monthly chart and go back to the daily chart, it's certainly hard to make an argument to get short this market. If you look at the daily again, I really like the pattern. I like the setup. We look like we're going to break lower here, but look again at the monthly chart, and you can see I've outlined all of these seasonal trends from Feb going into June. Boom, higher. This one didn't work out as much. We did get a bump higher before rolling over. Higher here in 04, higher here in 05, 06, 07, 08, 09, 10, 11, 12, 13, 14, 15, and then here we are in 17 here. So Hard to go against the grain on that. If we even want to take it a bit further, we'll look at UGA, which is the ETF for unleaded gasoline. And you can see we've got some convergence here, and we are definitely tempted to make a move. Starting on January 30th, we've got an 8 out of the last 8 years higher, 9.2% average gain with a cumulative gain of 35.6%. So my gut tells me we're going to have to maybe be patient, not take the short, look to see if there are some long setups. Now, if the overall market gets a little weak and starts to weaken in general, that should be a drag on the demand for gas and energy prices. But as long as things keep rolling and the markets continue higher and things are favorable for energy companies and the economy in general, we can expect to see higher gasoline prices. So we'll keep this on the radar and keep you updated. Till next time, have a good weekend. I want to remind you about Trade Thirsty's 3-man market mastermind on Saturday, January 28th, 9 a.m. to 12 p.m. Eastern. We've got 3 incredible speakers. Todd Gordon selecting the ideal strike price and options from tradinganalysis.com. Sarah Potter, extra weekly income generating trades for the options trader from shecantrade.com. And Stephen Place at the 11 a.m. slot, how to earn $500 to $1,000 per week with no added risk, less stress, and more freedom from investing with options. Make sure you click the link above to register. This event will fill up fast, and it's guaranteed to be a good one. Talk to you later.